The last time we spoke about this ticker, we identified a chop zone with a high probability of consolidation. Since that post, consolidation surely started. I would like to point out some critical details within the charts for us to go over, as they can encourage volatility over price action. Welcome back to the channel on this Hump Day Wednesday. This is ARCa, and let's dive into ticker symbol COSM. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive into ticker symbol COSM on the daily chart. And what you're observing here is that very chop zone that we spoke of, right? So this one, right, let me just move that out of the way and just kind of switch the color up a little bit. That is the very chop zone that we actually spoke of the last time. And since then, it looks like price action has respected the top side and the bottom sides of this chop zone, right? So I want to first of all let you know that just yesterday we made a break of prior bar lows, right? So actually range lows. So that can indicate some weakness to the market, and it can indicate a danger. Okay, so now in doing so, I started kind of looking around to those potential dangers. So I mean, we can observe a few of them, right? So for example, here, let's go ahead and notice that the hourly time frame linear regression channel does often give us a direction, a bias for direction, right? So in this case, whenever price action does close beneath one of the bands or above one of the bands, price action is likely to continue to a downside. So in this case, it looks like price action is getting ready to make a move down to the area of about $1, and it does have a range. So I'm just going to go ahead and point it out just like this, right? So let's just say that it would be over the span of maybe let's just say the first few hours intraday, right? So let's just say that it would be down to 99.42 to $1. That's our range right there. Okay, so 99.42, we're just going to note it down here. Okay, just like this here, to about that $1 mark, where you have that where you have those two wicks at the bottom side and many other candles touching that zone, right? So it is highly confluent. It is sharing a lot of price action, kind of respecting that target, just like you see here, right? So there is relevance to that, and there is a likelihood of bouncing to the upside from that. Now, what I will like to kind of point out here as that danger is if we kind of forget the immediate short-term time frame and get rid of the linear regression channel and put this on maybe, let's see if it works out on a daily time frame, or maybe even a 5-day. Let's see. A little less. Okay, there we go. That makes it a little bit, definitely some visibility pops up there. So if you don't already see it, well, I'm just going to go ahead and point it out to you here, right? So please notice that we are building potential head and shoulders formation, right? So you have your shoulder, your head, and your right hand shoulder right over here, right? So that kind of displays weakness in the market in general, right? So now let's go ahead and identify the neckline from this, right? So it looks like we have kind of a lopsided neckline, but it's okay, it's still fine. So it looks like it would be like that, and the way that you gain your psychological price objective would be from taking a trend line from the top side of the head all the way down to that neckline, and then you apply it to the bottom side of the right hand shoulder, which would be here right at the center, right? So in this case, the target implied is around 50 cents, 50.68, right? So that is a massive downside if it is that this does realize. But I will say that, yeah, there's still the relevance of this being a floor because of the dollar mark. It is showing that it's been respected over the last few weeks. And that doesn't mean that it's unbreakable. It just means that it's an inflection point and it's an invalidation zone all and out, right? So that it breaking and starting to close daily closures beneath that dollar mark would essentially give us, actually below the 97 cent in this case now, right? So it would start to show increasingly just stronger and stronger downside, right? So we would have to be very careful, as this would introduce a capitulation event if it is failed. Okay, so now let's take a range low to range high Fibonacci retracement and see what comes up, right? So yeah, actually it is, hold on. we go. And it is pretty confluent, right? So yeah, I want you to notice here that the target, the psychological target of 5068 is landing right in between the 4 spot 236 and the 4 spot 618 golden mean, right? So that is absolutely confluent, and definitely something that we should take into deep consideration in the event to where price action decides to continue to the downside, if it does. Okay, so that is already something that can lead to a potential danger. So now I want to present to you something else, though, right? Because there is also the possibility that I don't know if this is going to be something like this, right? Or maybe even like that. I actually don't know. But let me go ahead and try to put it down here for us, right? Okay, yeah, it could be, right? Something like that, and something like this here, right? So this, what you're observing here, is actually a falling wedge. So the falling wedge formation is a bullish formation, right? So this would actually introduce the potentials of touching down to 76.56, because in actually, you know what? I think we could still actually get away with this here. So yeah, if we put the formation start right here, then we already have it validated. So in all reality, we really wouldn't have to come back down here. But if it did come back down, then that this would touch down to that area of around 76 cents. Before it bounced to the upside. I will say that we're already at about 60% to the apex of the triangle, and usually these formations tend to break out at about 65 to 75% to the apex, right? So, and I believe we're going to get a weekly close here fairly soon, a few days, and then the next candle would start, and that would be, I'd say, 65 or 70% to the apex. So that would be a good candle to consider a breakdown or a breakout, right? So just to let you know, the formation is traditionally bullish, right? But that does not mean that it has to be favored. Okay, so let's go ahead and take into consideration some of these targets, right? So first one we're going to take into consideration here is the back of the triangle. Let's just say that we were to break out on this candle here. So just for the lack of space, we'll just move it slightly to the left. And this is suggesting a bottom side of around 27.78. Let's go ahead and take into consideration the center of the triangle, which could arguably be right about here, right? And then we apply it to that breakout zone as well. Let me line it up. There we go. And that is suggesting 45.76. And then the last one would be up the supposed area of breakout. So let's just say that were to happen right from this zone here, right? So then we would apply that to this part right there, right? So let me just make sure they line up nicely. And it looks like that is giving us a target of about 54.38. So now that first target being the higher likelihood target is kind of rhyming with our bottom side targets, right? So 51.95, pretty much 52 cents, to that area of about 48.24. So what that does for us is actually we have a focus now. Okay, so that target of around 54.38, we can observe that as a range. Okay, so 54.38, we'll lift it here. Something like this. Yep. And in the focus, in this case, would be the difference between the 4 spot 236 Fibonacci ratio and the psychological take profit at 50.68. Okay, so this is how I trade. I focus in on zones and try to get them as tight as I can, right? So yeah, in this case, I can't get any closer than that, but that's okay. And I think that's pretty good there. Okay, so that's looking like that could be the concentrated area, right? So 56.68 to the 4 spot 236 at 51.95, and I'll go ahead and I'll note these targets there for you just in case you do need them, right? Just like that, and then the other two targets, we'll just extend those because they're very close to the price action here, or to the outer targets. Sorry. So there we go. And we'll just put them down like this so that everyone is on the same page. Okay, so yeah, that's currently what I'm looking at. So let's observe let's observe something here, because on a daily time frame you can see that we're highly contracted. It looks like, and we're still contracting, so that means less and less shares traded on average. So let's go ahead and look at momentum here. So 30-minute immediate short-term time frame is already creating a bearish cross beneath the SMA 14. I can see that we reversed here. We've been doing that consolidation thing, so there may be a chance here of getting another consolidation run. Bi-hourly time frame is also suggesting consolidation with a pivot straight to the right. There is already downside being favored in the, in the 4-hour time frame. That is basically suggesting that we would continue to the downside here, and we would be approaching the gravitational zone, which would then push us further down. Now, to kind of validate that, the 8-hour time frame here is already in that gravitational zone, which could introduce a continuation to the downside even still. Okay, same situation here with the 12-hour as it is approaching the gravitational zone, highly likely to get pushed down there. A little bit of resistance coming up on the daily for the further downside, and what I could see here as that potential support is actually these macro timeframes here, right? So that would be the 3-day time frame finding support at the SMA 14 and the 5-day time frame finding support at the SMA 14, which is indicating that in a macro perspective, the $1 mark could be the zone for us to look at as a point of support. $1 to 97 cents, like we spoke of earlier, right? Right down here. So if that's the case, then we would need to wait for the 5-day closure. I think we just got that today. We're going to have to wait. We're going to be getting that 5-day closure, I believe, on Friday. So we're going to have to wait until Monday to see what the implications are based on that RSI read in the 5-day. Okay, so now you know the risks, you know the upsides and downside potential right now. Contact me if any questions at all. But please remember, team, to go ahead and reserve your spot for the ARC Masters trading course, as this is a 16-week mentorship. It is focusing on the very beginnings and basics of trading, right? The fundamentals of trading all the way up to advanced topics and mathematical concepts. Okay, team, so go ahead and get that started and get enrolled. I'll pass you the syllabus, the disclaimer, and all that good stuff. All right, team. Please take whatever I do show and iterate within these videos as just a form of entertainment, as it cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 forever. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good Thanksgiving and happy Thanksgiving. And I will catch you at the bell on Friday. Adios, team.